Hello, everybody, and welcome. Thank you for joining us for today's webinar, The Basics of Nonprofit Grant Management. I'm Kristen Biermeyer. I'm the Director of Marketing with Wagner CPAs, and I am thrilled to have you here today. Before we get started, a couple of quick items to note. The webinar is being recorded, and a link to the recording and the slide deck will be emailed to you after the event. If you have any questions during the presentation, please feel free to use the Q&A feature at the bottom of your screen. James will save some time at the end of his presentation to address those questions. If you encounter any technical issues during the presentation today, please feel free to reach out via the chat or email me, and I will help you out as best I can. Today, we are joined by James Conrad, and he is a leader in our accounting solutions group at Wagner CPAs. So without further ado, I will turn things over to you, James.
All right. Thank you, Kristen. And good afternoon, everyone. Coming to you from a rainy Oregon, Wisconsin. I am James Conrad, as Kristen mentioned, and I'll be talking to you about nonprofit grant management today. I know there's a lot of questions out there, especially for those that are kind of getting into grants for the first time, and I'm here to give you some information to get you started, give you a little taste of what's to come in your new adventure in grant management. So just to go have a little overview to start, biggest question, what are grants and why are they important? I think that's why we're all here right now, get a little overview on that. Information on reporting. There's a lot of reporting that goes into grants management and a lot of specific rules that are related to that. So we'll take a dive into that. Requirements that need to be met. Donors like to attach purposes and restrictions to their grants. So we're going to take a look at what goes all into that. And the million-dollar question for a lot of organizations, do we need to get an audit? Audits can be a daunting task for especially smaller organizations, but I'm going to come at it today with some ways that you can attack it if the need arises. So today's learning objectives, we're going to identify and analyze various types of grants for nonprofit organizations. We're going to define grant reporting and compliance requirements, discover and compare grants that work for your organization, and distinguish the ways grants can trigger reviews, audits, and tax status changes for your organization. It's a lot of information, so we're going to get to it. So just a little about myself. I've been with Wagner for about 4.5 years now. Been working in our accounting solutions group. We offer outsourced accountant solutions for organizations across the country. I specialize in nonprofit organizations, coast to coast, one in Los Angeles, one on the East Coast. So I've been around the country, so to speak. I'm currently the treasurer of the Verona Area Performing Arts Series, and I have been on the leadership board of the Church of Christ Memorial in Fitchburg. So been around the block with nonprofit grants, nonprofit accounting in general, been doing it for the better part of about 10.5 years now, and really enjoy working with those that help out the community. So as I led off, what is a grant? So grants could be seen as funds given from one entity to another for a public benefit. So the key in this case is the public benefit. If you have a funder who is giving money that wants something back in return for their money, that is a different kind of transaction. We'll get to that here in a second. So classic example, money is given to a nonprofit organization to, for example, the Red Cross. When you give money to the Red Cross for their disaster recovery, like the wildfires in California here recently, you're giving for a public benefit. You are meant to be giving to the organization and not receive something in return other than, a good feeling that you're helping out. Now, if there are reciprocal benefits, that is an exchange transaction. Exchange transactions would be as if you're going to the store and purchasing something. That's not a grant, and those are governed by different rules, and we'll dive into that a little bit more coming up. grants are solicited but not given. So if you look at grants versus contributions, they're similar, but they are different. The way I distinguish between them is that grants are asked for, contributions are given. So if you have money that just pops up in as a check in the mail one day, I would look at that as a contribution. But if you're going out, being active, applying for money that is being given out, that could be looked more as a grant. However, in an interesting little tidbit, grants and contributions are on the same section of the Form 990, so the tax form that nonprofits file each year. So lots of similarities. I look at the solicitation aspect as the big difference. They're not expected to be paid back. So when you give, you're giving and it's staying with the organization to be given out to their mission and to their end users. It's not a loan. They're usually given to charitable organizations or a nonprofit. You can give money to for-profit organizations. Obviously, there's going to be tax implications for that. And for the funder, there is tax implications in the fact that you can't use it as deductions on your taxes, your personal income taxes. And also important, they come in different forms from different sources. And we're going to get into that right now with our sources of grants. So for example, we're starting off with individuals. You can apply for funding from a specific person. It isn't exactly set up like that, but Mackenzie Scott also has been giving out gobs of money from to various organizations across the country. It is being done through a giving fund, so it's not truly an individual, but it would be a philanthropist that likes to giving money to organizations. We have foundations like giving funds and endowments specifically designed to have money and to give it out to organizations that are deemed worthy. Then we have corporations. Corporations, for-profit entities will have charitable arms frequently, or they will donate from their specific coffers to lower their tax burden or to support organizations that they would like to support. And of course, we have the government, and each government level can have grants that are given out to organizations, local, state, federal. There's been a lot of news recently about federal funding and the current new administration and their handling of funds. So there's a lot of money out there for organizations to get. So starting off with individuals, a person wants to fund a purpose. It's really as simple as someone applies, the person sends the money, and that's it. It's nice, simple, easy to deal with most of the time. I'm not going to say it's all of the time, but most of the time. And especially for your smaller organization out there that may not have development personnel, you don't want to forget your donor acknowledgments, your written letters that the IRS requires for the $250 and more contributions. Also important with these individuals, and sometimes that can make it harder, as I mentioned, are conditions and restrictions. And I have more specific information on that coming up. But what I'd like to highlight here is failing to follow the instructions from a donor can ruin the nonprofit's reputation and cause other knock-on effects that could require returning funds. So make sure to listen to the donors. Foundations. So as I mentioned earlier, foundations have different forms. I mentioned the philanthropists with their own private foundation, the pooled resources from multiple donors. Some of you are going to be familiar with the Madison Community Foundation, large pooling of funds, resources that go out to specific purposes, specific organizations, combination thereof. And then the charitable arm of for-profit entities. My two favorite examples here are the Brewers Community Foundation and the Green Bay Packers Foundation. Would love to work with them in the future. But they're out there to be a show of goodwill to the communities that they're in. So, like others, foundation grants come in many forms. One-time gifts to permanent endowments and anything in between. You could have multiple year long-term projects that are funded by foundations, or it could just be a one-time, here's some money, go do some good work. So as I mentioned with corporations, for-profit companies can donate to the nonprofits, lowers their income tax burden, increase their community goodwill. But as some of you have out there through workplace giving, they will partner with pass-through entities like United Way. United Way is a very typical setup where you can give through your paycheck. Community Shares here in the Madison area is another organization that works like that. So there's multiple ways for corporations to get in on the funding strategies. And governments, as I mentioned before, there are a lot of times given to companies that provide human services to the community. So we have drug rehab programs, homeless relief, hunger relief, wildlife rescue, uh, forestry conservation, you name it. And if it's something that helps other people, there's probably a government grant out there that'll help that. The drawback on government grants is that a lot of times you're competing with other organizations that are performing the same work. And as much as funding there is out there, it is ultimately limited by the budgeting of the whatever level of government you're working with. So the federal government has, you name it, so many different funding opportunities. For those of you that deal with it, the ALN, or what was now known as ALN, then known as the CFDA number. There are so many different types of funding opportunities. But frequently with these government grants, you'll have stipulations like match, meaning you need to fundraise for matching dollars. That creates an extra burden on organizations that are looking just to fund their programming. You end up having to go out and solicit more to qualify for the government funding. And of course, with government comes auditing. And there is a higher likelihood that you'll need a financial audit, if not a higher level audit, depending on the amount of government funding you've received. Some of you may know about the single audit, and we're going to talk about that in a little bit. But there is more compliance pieces when you work with the government. So for the purposes of grants, you could have anything from just general operational capacity building, building projects, technology, as I mentioned earlier, disaster relief. The Wisconsin Economic Development Corporation has small business development grants, business startups. Grants can be for virtually anything that a donor wants to fund. But as a reminder, there is asterisk with that. The donor can restrict the when and the where the funding is spent. All right, so we have a little informal poll here. No need to answer anywhere. We're not going to have a pop-up. This is more just food for thought. So your local nonprofit provides drug and alcohol rehab services. A local philanthropist lost a family member to an overdose and wants to donate funds specifically meant for your residential treatment program. Are they allowed to tell you how to use the donation? Yes, donors may tell recipients how to use their donation, or no, we may use the donation as we see fit. I'll give you a couple seconds to ponder. All right. So if you answered yes, you are correct. So we'll get into the nitty-gritty of restrictions later on, but donors do have the ability to tell you how to use their funding. Okay, so early on, I mentioned the exchange transaction. So exchange transactions are purchases of goods and services that entail a reciprocal agreement. So imagine when you go to the grocery store and you give them money, you take food and you have groceries. There is a give and take with that. So in an exchange transaction for organizational level, the funder expects something in return that benefits them, not the general public. That is the key. The reciprocal benefit means that the giving organization wants something of commensurate value or something roughly evenly the same value. Now, contributions are a transfer that is voluntary and non-reciprocal. There's no obligation other than the purpose or the restriction that we're going to talk about in a little bit. The end beneficiary is the general public. You're not giving something back to the donor, to the corporation that's giving you money. And as I mentioned earlier, the way to think about a grant in this case is that it was solicited, it was asked for, you reached out to somebody for it. As I mentioned, with the tax form, contribution and grants are in the same sector, so I'll often use the wording interchangeably. Just know that we're really differentiating between the exchange transaction and the non-exchange transaction. So we have this flow chart here. It's small. You're going to see it in the slides, but what I really want to highlight is this differentiation is not cut and dry. We have internal discussions about these sort of situations about one word in a grant agreement, or in this case, it could be a fee for service agreement if it's an exchange transaction. And what makes it even more difficult is that you can have transactions that are both. They could be split, where you have an exchange portion of the transaction and a contribution portion. My favorite example for this is a nonprofit gala. You buy a ticket to attend the gala. When you go to the gala, obviously you could get in, but then as part of your ticket, you have a dinner where they have presentation awards during it to highlight members that they they wanted to highlight from the past year. There's a silent auction during the event where you can bid on items. Um, as part of the entertainment of the evening, you have a band performance that comes in. Somebody they want to help with the organization. A band comes to play to juice ticket sales. So of all of those different things, what's an exchange transaction? What's a contribution? A lot of it depends on the price of the ticket. Are there other things that you paid for in addition to the ticket? These are the questions that we as accountants have to ask to determine the difference between the exchange and the contribution because they are handled differently. It's all about that getting value in return. So beyond the exchange versus grants. So let's imagine that we are talking about grants slash contributions coming up. So imagine a grant that has thresholds that need to be crossed. So for example, if you're Meals on Wheels, the number of meals served per day. Um, or if you have a matching fund in a fundraising event, a donor says, if you raise $10,000, I will give you an additional $10,000 on top of that. That is a condition. So conditions have barriers. The barrier in these cases is the number of meals served per day. If you need to serve 10, once you hit 10, you meet the condition, or the $10,000, as I mentioned earlier. So revenue, when it goes onto your books, depends on the qualification and when it is met. and it is not the same as a restriction. Restriction is about purpose and time. Conditions means you need to meet a threshold. So government contracts often have conditions in there. And if you deal with government contracts, you're going to know a lot of them are reimbursement style. You do the work, they pay you back later. Now, that means A, you need to front the money, and B, you often will get an administrative boost on top of it. They'll give you a chunk to cover your own costs. But often, all of this government funding is going to be units based, outcomes based. Did you serve the number of meals? Did you clear out the brush in the forest to lower fire danger? There's going to be numerical, tangible outcomes that they are looking for. Also, with government work, you may have fee for service. The question is, who is the beneficiary? Are you doing work for the government that benefits the government, or are you doing work that benefits the general populace? And that's where these question marks will come in that have to be discussed. So unlike conditions, we do have restrictions. So this is from the donor. It's important to remember that restrictions come from the donor, not from anybody else. You can put internal restrictions on things, but those are handled differently. This is strictly talking about donor restrictions. So donor restrictions come in two types. We have purpose restrictions. The grant can only be used for a certain program. It may not be used for admin. These are the examples I generally use. You have a program, you want to raise money specifically for that program. You will tell people this money will only be used in this program. But you can also have time restrictions. So imagine you have a 3-year grant and they're going to give you chunks each year. You could have an escalator in there, you could make it even chunks. What it means is that the revenue recognition is different, and you're going to have a portion of it that's going to be time restricted for future use. You'll often have donor restriction or for purpose in government grants. They may not necessarily appear on your books that way, but the key is they want work done for a specific reason. So you'll have a program that you want, as I mentioned, like clearing out forestry, like dead kindling for fire danger and making sure to lower fire danger. What's also key here is that you'll often have only a certain amount of overhead to be able to be charged to it. For some organizations, that's as low as 15% for federal, 15% of program spending for federal dollars. You could have rates that are higher, depends on the organization. And often you'll have it with specific timeframes. Grant agreements, especially with the government, have a specific window that you need to operate within. So what about endowments? Endowments had been, especially in prior years, but I've heard some items about it with the current administration about places like Harvard, places like Yale, large educational institutions that have massive endowments. Harvard, for example, has an endowment in the billions of dollars. Endowments are often restricted. They're donor restricted. You can't just use it for whatever. Endowments will have the way they are structured, you can use pieces of it for either specific programming. It could be just for overall operations. But often with these endowments is that you have the initial piece that's given. It's called the principal or the corpus. That may not be used. You can't touch it. In prior years, this would have been known as permanently restricted. It's not meant to be touched. You're supposed to skim off the top of what it makes in the market. So while the organization owns the endowment, they don't have control over the use of the endowment in a full way. So as I mentioned, colleges, museums, higher education will have endowments like this for use for their programming. So are there restraints on endowment funds? The answer is yes. You will often have this. You can't just use the endowment to plug a budget hole. It's there, and there are specific rules and regulations for endowments. So keep that in mind. And often, because I work with religious organizations on a regular basis, I like to bring this up. So your offering plate, your tithes and your offerings, when you pass the plate each week, they are not exempt from donor restrictions. Donors can still have restrictions on them. Now, if it's money that's just coming in the plate, more often than not, it's just going to be unrestricted dollars. But if you have special collections, so imagine much like the Red Cross having disaster relief, a church will say, oh, one of our sister churches in another state was hit by a hurricane and they're trying to rebuild. That's a special collection. That is restricted dollars. The rule, even if it is implicit, says when you give to this program, you want it to go to that program. You just don't want it to go to whatever. So internally for religious orgs, you'll have things like the building fund for keeping upkeep on the building, or the flower fund. You want the altar to have Easter lilies, for example, in the Christian churches here in the Lenten season. I've often seen it numerous times in the last 10 plus years. The houses of worship that have poor practices will lose track of their restrictions. The flip side of that coin is that often the donor themselves will forget about it, but that doesn't necessarily release you from your obligation to keep track of those things. But the key is that if members know that you aren't respecting their wishes, they're going to just take their money elsewhere. They're not going to give it to you. They want to make sure that their dollars are going to what they want them to go to. So on financial statements, we're not going to get too deep in financial statements today, but I did want to highlight that if you look at a statement of financial position, and in the for-profit world it is called a balance sheet, at the bottom of the report is the net assets section, and you're going to see the with donor restrictions and without donor restrictions section. If you have no restrictions, you may only have without donor restrictions. But if you do have them, you'll often see the types of restrictions appear on the statement. There may be a supplemental schedule elsewhere in the financials, but you'll often see them broke out specifically. And just a reminder overall, net assets and what they are, it's what you own versus what you owe. So whatever is left over from what you own, imagine you own buildings, cash, land. If you sold everything, liquidated everything, and then paid off your bills, your mortgage, whatever other debt you have, the net assets are whatever is left over from those transactions. I alluded to revenue recognition earlier, and there are so many rules when it comes to revenue recognition and the timing of it, and they are very confusing for end users, including us accountants who, like I mentioned earlier, we have discussions internally about it regularly, and we'll have disagreements about it. We'll have discussions with auditors where we'll disagree with the auditors because there is ambiguity sometimes. But a good way to think about it is I like to make it similar to the order of operations. And if you remember PEMDAS or just the parentheses, et cetera, I'm even gonna forget it. But it's kind of like that. You want to have kind of a flow chart where you check these different steps along the way. So is it exchange or a contribution? Is it conditional or unconditional? Is it restricted or unrestricted? Once you start going through these checkboxes, you start to understand how things appear on the books and when. All right, poll number 2. Your nonprofit received a large donation from a local philanthropist, summing $500,000 in various stocks they owned. The donation is placed into an endowment, and stock dividends accumulate in a related money market account. The donor says you could spend the profits on wherever the greatest need is. What is an acceptable use of the endowment? A, sell all the stocks and buy a new building. B, use the dividends to fund your programming. Or C, take out some of the stocks for a desperately needed new company van. So I'm going to let that one marinate a little bit for you all. All right. If you said B, that is the correct answer. Selling all the stocks is questionable because if it is set up as an endowment, those may be restricted to specific purposes or permanently restricted if you can't sell it at all. And then selling some of the stocks doesn't mean it's the same as selling all of the stocks. Be careful about the rules and regulations that was set up on large donations because it may affect how you can use the money. So everyone's favorite, compliance rules. And I have this out here because I cannot stress it enough. I hammer this home with whoever I talk to about grants. Know the rules for your grants. You absolutely need to know the rules with compliance. There are laws, there are rules and regulations that are imperative to know. The agreements themselves are your rule books for your grants. It will have purposes, rules for fulfillment, how you are providing the good or service to either the original funder or the end user. When you need to report, how you need to report, the specific form names. Know these things. Read your agreements because that is the rules and regulations, your guidebook that you need to follow, excuse me. So when it comes to reporting, just like accounting, it depends. Every grant is different when it comes to reporting. Excuse me. Federal grants, for example, will lay out the rules and the forms you need. If you've heard of the SF 270 or the SF 425 for federal grants, those are forms that are commonly used. But grants may be as simple as just having the IRS donation letter. If somebody just says, here, I'm cutting you a check for money that you asked for, send them your thank you letter, and there you go. But as I mentioned, government grants have those specific forms and formats. And you may get a large grant that is more trouble than it's worth. If you don't get any admin funding for it, it can only be used for programs. Well, who's doing the reports? Who's going to cover the wages of the people who are filling out these reports? Can't use the grant. What are you going to do? And if you have to find matching funds, who's going to find those matching funds? Grants, while they are very useful, are not a cure-all, and you need to analyze these things when you have these funding opportunities. Going out and looking for grants, you'll often see these requests for proposals or RFPs. So an RFP is a solicitation from the donor in this case. It's not you asking them. They're going out and asking, hey, can anyone give us these services that we're looking for? Like when I mentioned the drug rehab services, not everybody could do rehab services. They're looking for organizations that have a track record of providing these services already. They're going to look for pricing, the methods, what you've done in the past. And it can be structured as fee for service or a grant, depending on who is receiving who is the end user in this case. Oftentimes you'll see it conditional with the number of units. For example, if you need to have X number of beds occupied on certain days. Whatever the case may be, it could be structured that way to have really rigid guidelines for it. So as I mentioned, specialized services. Public works projects are another one. You wouldn't want me going out and jackhammering the road because I'm not going to be able to fix it. They want construction service companies. Now I'm just imagining myself trying to run a jackhammer and just not going to work well. And there's an aspect of competition for these. There's weighted scoring. So often, they're going to want the cheapest because they don't have to pay out as much. But there is a aspect of, is the job going to be done well with experience? The capability to do it with the materials that you have. Or are you local? Do you want to hire somebody that's local, in state, or do you want to have a firm that's possibly national is wide, but they may not be based locally? So with these, when you're applying, make sure to read the reporting requirements and what you need to provide. You may be able to provide the services, but can the accountants handle the frequency of the reporting, the type of reporting? Can the boots on the ground, so to speak, your operational personnel, can they handle some of the reporting? It may not be something that ultimately you can handle. The dollars may be there. You may not have the personnel to be able to handle it. And some of these pricings per units, you could be losing money compared to other types of funding. So a lot of analysis goes into these RFPs. So you're going to get money. You've got the grant, and how are they going to pay you? So I mentioned reimbursement grants earlier, but you can have some where they'll give you a lump sum right up front and you spend it down. Advance payment, those are great because you have the money in hand. You don't have to worry about getting a check from whoever is funding you. You just have it all and you're ready to go, rock and roll. But you could also have time payments, equal monthly amounts. They just give you chunks every single month. It all depends on how the funder wants to structure it. And as I mentioned, like with the advance payments, your company cash flow should be considered. If you're always strapped for cash and like you're living hand to mouth and you are worried about making payroll, you probably don't want to have a reimbursement grant because you're going to be fronting that money for at least a month. And if it's a large grant and you only have, $15,000 in the bank and you're waiting for $100,000 payment, oh, good grief. That's just not going to work. Yeah, so advances are great because they help the organization out a lot. So for reporting standards, I should make this flash. Read your grant agreement. You can't not read your grant agreement. Know it inside and out. You will have adverse results. um, They have the what, the when, and the how. They have your guardrails that you need to stay within. And honestly, successful nonprofits have the experts that know about rules and regulations. They may be dry as toast, and they may be something you don't want to read unless you want to fall asleep. But if you want a successful organization, you want somebody that knows what they're doing. And I've kind of alluded to it. Don't bite off more than you can chew. There's definitely a scale aspect to grants and making sure people know how to deal with them and the certain types of awards, having that expertise. It's something you learn over time. And so the higher level accounting needs happens a lot. When you jump to federal grants, and if you get one large federal grant, all of a sudden you're going from no audit to a single audit. And that is going from the lowest possible compliance to the highest possible compliance. And that can just throw everything out of whack. It's super important to know when it's right to jump to these next levels. And donors can make the requirements for you to have a review in the audit. Don't make a $100 donor make you get an audit. Audits are going to cost, more often than not, if it's even more of a single audit, but you don't have a 5-figure expense for that audit. So if they're giving you $100 and they're the only ones that are making you pay, you're losing money hand over fist on that. Don't do it. It's okay to say no. Everyone's favorite, taxes. So for nonprofits, we have the Form 990, and I have the listing here of the different forms. There's a whole bunch of alphabet soup when it comes to these forms. I will go over everything because I don't want to bore everyone to tears here. Wisconsin itself, because we are based in Wisconsin, we have some additional forms that go along with the Form 990 that the state requests. Um, there's a couple of different levels depending on the type of 990 you have, but there is some state requirements in there. So to consider things to consider. As you saw in the previous slide, there were some dollar thresholds for the types of form that's used. For Wagner's purposes, when we're offering tax services for nonprofits, we have different rates for the different forms. If you go from an EZ to a full 990, it's going to be a different cost. If you go from an N, which is the postcard, even just to the EZ, it's a considerable jump. So keep that in mind. If your funding is going to cover some or all of that cost, then it's a winning proposition. Are you branching out into something completely new? That's something to think about, because if it's not part of your mission, there's going to be a possibility of unrelated business income tax. The key for unrelated income tax is it within the umbrella of your mission? Are you going to be able to justify the work that you're doing as part of your mission? If not, watch out. So we have some rules here specific for Wisconsin. What I want to highlight here is a review and an audit are two different things. A review is kind of like audit junior. It will be auditors have to, or excuse me, reviewers still need to be independent CPAs. Audits have additional compliance pieces that they have to follow. And then for Wisconsin specific thresholds, the way contributions are defined in the statutes, it does not include government grants. But whatever the case may be, it's something to think about as your organization grows. If it's small now, that's going to be bigger. These are things that you're going to have to think about in the future. And of course, other states have other requirements. Those will have to be reviewed with those specific states. But for the feds, we have the single audit. The single audit is rigorous, and I'm in the midst of for one of my clients, in the midst of a single audit right now. And you wouldn't imagine the information that we have to pull for them to make sure that things are in compliance. So as of this year, the threshold for the federal spending has increased from $750,000 to $1 million for triggering the single audit. Now, if you don't hit that $1 million threshold, there may be a slightly less rigorous audit called the Yellow Book audit. I'm not going to get into the specifics of it, but it is rules set for it by the feds to make sure you're using the dollars correctly. And that's all part of the government knowing that their dollars are being used responsibly. All right, our final informal poll of the day. You are a pastor of a local church. While the parking lot is filled on Sundays, it is virtually empty the remainder of the week. Since your church is in the city and parking is difficult, you decide to open your lot on the weekdays to commuting workers. What are the tax implications? None. We're a church and we don't need to pay taxes, is option A. B, we'll have to pay taxes, but at a reduced rate compared to the private parking garage down the street. Or C, we'll have to pay the corporate tax rate on the profits of the parking spot sales. I'll give you a few seconds for that. All right. If you answered C, that is the correct answer. I always like answer A. We don't need to pay taxes. We're a church. That is absolutely not true. Nonprofits, depending on your jurisdiction as well, may have to pay sales tax. It's when you hear tax exempt, it is for federal income taxes, not all taxes. So, and even then, you may have unrelated income tax. So, nonprofit, tax free, get that out of your mind. There's different rules. All right, and as we approach the end of the materials here, and we're going to have question time pretty shortly, just wanted to have a little review. So organizations can apply for and receive grants. The solicitation aspect is really what I want to highlight there. Asking for it really has the grant portion of it. Information that needs to be reported to the funder depends on the agreement. Know your grant agreements. Know your grant agreements. Can't say it enough. Just put it on loop. And each grant will have different requirements beyond funding, maybe like match or purpose restrictions, time restrictions. Know your grants. Know your grant agreements. And we have dollar thresholds in the state of Wisconsin that determine if you need some level of assurance from an independent agency, the review or the audit, or the single audit for the feds. All right, so we have reached the end of the presentation. So I see, I'm just going to pull the Q&A over. All right, so first up, we have a question from Shelly. Thank you for asking. What if you send a letter out requesting money to individuals? That is a kind of a gray area. As I mentioned, grants and contributions kind of have a hand-in-hand aspect there. I would probably call that a contribution, not a grant. I think of grants more of as a program, uh, ongoing program where organizations are giving out funding for end goals. I could see either or there. I would probably say that's more of a contribution. Item from Claudia. Many of our contributions are solicited to individuals and organizations through different appeals, such as direct ask, mailing, and we don't consider those grants. Yes, and I would agree with that situation. Not all solicitations are a grant, but I would argue that in order for something to be a grant, there has to be an aspect of solicitation. It's kind of like the square and the rectangle argument. But yes, not all asks are necessarily grants. Question here from Lisa. Distinction between government grants and pass-through funding of a government grant from a corporation. What is this to the grantee? That's a great question, and it really depends on the agreement. That could be qualified as a sub-award, if you've heard that term. The rules really are dictated by the agreement. You could have different setups between the end user, so let's say it's your organization receiving it from the corporation, and the agreement between the corporation and the government. So that is all dictated by the specifics in the agreements. Know your grant agreements. But there is a distinction, and it really is a case-by-case basis. Question here from Darren. Should admin time always be listed as indirect costs, or can it be lumped in with salary costs when presenting project budgets? And that is an excellent question. The answer is maybe. And I hate answering that question, but there are some grants where they call admin time a program cost. Not all of them do, and especially not the federal government, where they want that as an indirect admin cost. But I'm not going to say it's always that way. It depends on the grant agreement. I love seeing when admin time can be a program cost because that makes things easier and there's a lot more wiggle room for what you apply to it. Um, Question here from Lisa. Distinction between a sponsorship of an event and a grant. Ask for some government sponsorships, but then they request matching funds or proof of how the sponsorship funds have been spent. How is this categorized? Let me chew on this one for a second. You ask the government for sponsorships and they request matching funds. It sounds, just with this information that is presented to me, obviously there's more details that could go into it, but sounds conditional to me. I hear that matching funds aspect and they'll say, if you can find 10,000, we'll give you 10,000. That, that, hmm, I'd have to get some more information about that one, but um, that's a great point where there could be some wiggle room on how to classify that. What I'm not hearing though is that it's a necessarily an exchange transaction, and I didn't highlight it in here, but there is a difference between advertising and sponsorship. Sponsorship really it crosses the line between sponsorship and advertising when you can have a price or product comparison for whatever the organization is offering. That's another topic for another day, but I've gotten into discussions about that in the past. So that's another one that I'll have to remember for the future. Will the PowerPoint be available for attendees? Yes, I'll be sending it to Kristen here afterwards and she'll have it sent out. Couldn't the weekday parking be couched as a fundraiser? I would argue no. Yes, you are raising funds, but it is not under the purview of your mission. You are not a nonprofit parking provider. You do a nonprofit other stuff, and you happen to have this parking lot that you are selling spaces to. Um, the government in the past has not been very kind to those that counted as a fundraiser. They counted as UBIT most of the time. So great idea, not going to work in practice. Another question from Lisa here. If you met the threshold in the past for a single audit and those projects are still ongoing, but as the thresholds increase, you no longer meet the threshold. Are you exempt from the single audit? Great question. I hesitate to answer this because it could depend on how the grant agreements are set up, but nominally, single audits are triggered by the spending threshold. I'm not as familiar what happens in the transition. That's something to discuss with your contacts at the government. However, for new projects, you're going to trigger it with the new higher thresholds. So that's a discussion to have with your contacts at the government. If we have a form that says we are exempt from taxes, is it still dependent on the jurisdiction? Yes. So California, for example, one of my clients is based in California. They still have to pay sales tax. They don't have to pay federal income tax on their regular mission-based work, but they still have to pay sales tax. Whereas in Wisconsin, you could get a sales tax exemption. So it does depend on the jurisdiction. Um, and knowing where you are makes a big difference. Question here from Becky. How do you know when a grant from the government is fee for service or a grant? Generally, the fee for service would be, could the government do the work, or are they outsourcing it? And who is it meant to benefit? If you're doing work for the government that the government would have to do, I would argue that's a fee for service. If you're doing work for the government that's meant to benefit the greater public, that's going to be a grant. So what is the aspect of the exchange? Is there truly a reciprocal benefit for both sides? Or, are you just a government contractor? or are you doing something for the government that it wants to occur? Keep that in mind as you're going through these questions. Question here from Gina. Do you have any recommendations for grant websites and programs to help search for funding? Yes. SAM.gov, SAM.gov. That is the federal portal. And I know federal is a little tricky right now given all of the happenings in Washington, but that's one. Otherwise, your local government websites will often post them. Dane County Health and Human Services, for example, they have their information posted. So depending on the work that you're doing, look into the local governments. Heck, even give them a call and they can guide you to the right direction. If we are a 501c3 nonprofit in California working in film, what if I have a vendor that does animation services or editing services and donates the cost? Is that considered a donation and can be written off? Without knowing additional specifics, my initial reaction is yes, that is an in-kind contribution. If they're doing work for a project that is within your mission and it is professional services, not everyone knows how to do animation, not everyone knows how to do editing. Everyone could pick up a broom and sweep. The difference in this case is because it's a professional service that is specific to a type of work that can't be done by everyone. That can be considered a donation and can be acknowledged as a donation by the service provider. If there is no grant agreement, it is almost certainly a contribution. I hesitate to deal with absolutes, but yes, frequently I would agree that a contribution is there's no agreement. Oftentimes it'll be unsolicited at that point, and that will be a contribution. I wouldn't get too hung up on the grant versus contribution. As I mentioned, it's displayed the same way on the tax forms. So yeah, I would argue the exchange versus the contribution aspect is more important. Question here from Megan. What about small family foundations? Are those grants? And what is the right way to acknowledge those donations? It depends on who sent the funding. Is it from the family or is it from the foundation? If the foundation is the one that sent the money, their name is on the check or their name is on the ACH, you send the acknowledgement to the foundation. And that's often why the families will have that. But it really depends on where the money functionally came from. Question here from David. Can you expand on the implications of exchange transactions? We get money from corporate foundations to provide training inside their organization. That is an exchange transaction. They're looking for services that benefits their foundation. You're training the people that work at the foundation. That is a contractor coming in and providing services. That is an exchange transaction. Now, if the corporate foundation was funding you to provide training to outsiders, then I think you may have a grant situation. But because they're getting something reciprocal and they're getting something in return for what you're doing, that's an exchange transaction to me. Some funders proactively reach out to provide grants with grant agreements, even if there is no initial ask from the grantee. Yes, I have seen that. Yes, I would have to see the specifics of that, but I have seen that before. I also might call the contribution depending on depending on some other items that go into it. Accounting, I could probably just have a recording myself saying it depends and play it on loop, and that could be my answer for a lot of questions for accounting. I know it's not what everyone likes to hear, but there are a lot of caveats to everything. If your nonprofit has operated for over a year but have experienced zero cash flow, are you obligated to submit any forms or audits? hesitate to answer this one because I know there's different rules, uh, especially if I'm assuming in this case you are still in operation, if just dormant, and that does require ongoing form filing. It may require just the 990N, but it could still require an EZ depending on the amount of assets that you have. So again, unfortunately, it depends. Um, and um, yeah, I can't really go beyond that other than that's going to require some additional digging. And we're up against the clock here. I'm going to do actually, I'm gonna call it here. I'll take a look at the rest of the questions. If anything else that I haven't covered comes up, I can have some supplementary information that I could send along. Otherwise, thank you for coming today. I appreciate everybody who took the time to listen to me today. I have my information here. If you have any questions that you'd like to send to me, give me an email. Email is the greatest way, to contact me. I'm a millennial. I don't talk on the phone. I do an email. So thank you all for attending today, and we hope to see you again down the line.